What's up, everybody? Thank you so much for joining us for the Customizing Culture podcast by Heat Press Nation. I'm your host, Jared Barbosa, and today I'm joined by a very special guest. He's everybody's favorite uncle / cousin. We're here with none other than the self-employed tax guy, a.k.a. Tyrone Gregory. Tyrone, dude, thank you so much for joining us on the podcast today.
Oh, man, thank you for having me. This is an honor. Definitely an honor. I appreciate it. Thank you.
Trust me, the honor is all ours. If you guys don't know, and I'll let him introduce himself right now, but if you guys don't know, Tyrone, through his channel, has just imparted so much gold nuggets into the community, especially the small business community and the Heat Press t-shirt community. So we're just really grateful to have him. And we're hoping to get some of those gold nuggets on the podcast today. But for people who don't know you, or this is their first introduction to you, can you tell us a little bit about what you're about?
Yeah. Well, again, man, I cannot thank you enough for having me on here, man. It's truly a pleasure. But as he stated, Tyrone Gregory, the self-employed tax guy, I am a tax preparer, right? That's pretty much what I do, enrolled agent with the IRS. But I also have a passion for the small business community, right? So my channel is completely built on providing information on how to be successfully self-employed. That's pretty much what I do. And
you do it very well.
I appreciate it.
Yeah. So if I may ask, like, can you walk us through your journey into being like a tax preparer? Is that something that you like fell into? Is it something that you were just like, oh, I just want to help people with this? Like,
no, I'll be honest with you, man. Tax accounting wasn't something, it wasn't a career choice. This just so happened by happenstance. Like, I've always loved entrepreneurship, but I love working with my hands. So I had started my own construction company. Well, let me not say construction, because in California you had to have a license, and I didn't have a license. Okay. So they kind of demoted me down to a maintenance company, but I was still able to work with my hands. And in doing that journey, I had just got married, and my wife, she said, well, have you filed your taxes? And I was like, yeah. In the back of my mind, like, no, I didn't. So let me go get this done, right? And I thought I knew what I was doing. Read all the publications, thought I had everything, submitted my taxes, and I got audited. And it was like the absolute, as far as financial goes, the absolute worst situation to be in, getting audited by the IRS and have to do all this. That's a nightmare
for a lot of small businesses.
It is. Yeah. It is. And I tell everybody, it is a process, but don't freak out. Just don't freak out. Whatever you do, don't freak out. And so after going through the process, I told my wife, I was like, you know what? Before I go through this again, I'm going to learn exactly everything I need to do. So I went and enrolled into a tax class, learned it, and it really just changed my whole trajectory. Because my teacher, he was like, man, you really should just try to work with us for a season. And I was like, no, I got my own company. I'm doing all these jobs and managing that. And he was like, man, look, it's only 4 months. January, April, give it a try. I was like, I said, all right, let me see. And when I started interacting with the clients, and small business clients would come in, and I'm excited. I'm like, oh, did you know you could do this? Like, no, nobody ever told me. And I'm like, what you mean? Like, how do you not know this? But I was like, oh, I didn't know that, until I learned it. And it kind of took off from there, man. I was like, you know what? After that one season, I let go of the construction business. I had family members working with me, so I completely let them, like, y'all can take over. I'm going to focus on this full time, man. And it took off from there.
So how long have you been in the tax preparation business then?
I have been preparing taxes a little over 15 years now.
Oh, okay. So, good. So see, so you guys can rest assured, we're getting information from a vet, all right? 15 years doing anything, I think that makes you a vet.
Yeah,
right?
I'm all right. I'm all right. Yeah. There's still some people in the game that's been in longer than me, so I still got people I look up to, for sure.
Nice.
Yeah.
Now, you call yourself a serial entrepreneur.
Yes.
So on that, I love that, by the way. I feel like we're cut from the same cloth. Before we came on camera, we were talking about like some of like I got a nice list of failed businesses.
Same here.
But then I appreciate what you said. You called them learning experiences.
Absolutely.
So, can you walk us through some of your learning experiences?
Like I say, but I've been wanting to be an entrepreneur for as long as I can remember. I think probably at the age of 12 or 13 when I first learned what the word meant, right? And that was a thing of mine. I always drew up plans. I remember sitting at the table. You from California, I'm assuming.
Oh, yeah.
Right, so we know Six Flags?
Yeah.
Magic Mountain.
Yeah.
Like, we used to go to Magic Mountain a lot, and I used to hate the walk. right? So I said, dude, you know what? At the table, I sit down, and I'm dating myself here. The Flintstones was one of my favorite cartoons. I love Flintstones. And so I sat down at the table and I drew out a kind of like a stroller, but it was based on Dino.
Oh, Dino,
yeah, Dino, right? And so that was my first venture into trying to start a business, and I was going to have that be a rental booth at Magic Mountain.
to take people through the park?
Yeah, to take people through the park, yeah. So that was my first adventure. So me being an entrepreneur is something I've always loved, always wanted, and I have attempted many of businesses.
Can you give us a few examples? Or?
Oh, man, let's see. What the construction one, right? So that was the first one. That was me starting my own business in construction. It's funny, I just recently went through my storage unit and I found like a multitude of business cards. So construction was one, car detailing. What else did I have? Another one, general cleaning, like janitorial, right? Then I had one that was just doing consulting. I'm trying to think. It was so many.
Did you ever try like heat pressing T-shirts? I know you're wearing your shirt today.
Yeah, this shirt was made with a heat press.
Love it.
And I mean, heat pressing wasn't mine. So when I bought the heat press, it was actually recommended. I don't know if you know the gentleman Stan Banks from T-Shirt Side Hustle.
T-Shirt Side Hustle.
Yeah, man. He because my daughter wanted to get into making clothing at the time. She was 13, really was into unicorns, and she was like, Dad, I want to do something. You know, me being an entrepreneur father, start your own. Yeah. You know, I'll invest. So I went in and consulted with Stan, and he was like, yeah, get your heat press from Heat Press Nation. And so I ordered one. And it was funny. I ordered it. Yeah, I did. I ordered it, and it just sat there for a year. Right? Because, like, you know, as much as we as parents are entrepreneurs, that don't mean our kids are going to pick up that same gene. Yeah. I encourage it a lot. So it sat there for a year, and I'm like, you know what? I'm going to use it then. Yeah. And that's, man, so then after having a conversation, like I said, with Stan, and just thinking of the idea, like I have this machine sitting here, what can I do? And of course, the IRS allows us to deduct uniforms. So why not make my own uniform?
Oh, there we go.
Now I'm branding, right? So I have my own brand. I'm creating it myself, and I'm deducting it. Yeah.
There we go.
Heat press is sitting in the office, and every time I feel like I want a new shirt to put on for a new video, I press my own shirt right there.
Love it. But you never did that as a business.
Never did it as a business. Okay. Yet. Because we're talking about serial entrepreneurship. That is the thing. Is like, in every industry, you can always find an aspect to make what you do more broader. Mm-hmm. Well, like, think about it. We use Vaseline. Like, that is a product of petroleum jelly for gas. But they was like, instead of wasting it, let's convert it into a product.
I did not know that.
And now we have that, right? So we have this
now
industry.
For everything. Jeez.
Exactly. I mean, but it's like when we do that, when I tell you serial entrepreneurship, like, what can you do? Yes, you're going to have your MVP, your minimum viable product. That is the core attribute, product, or service of your business. But what is the runoff? Don't just throw it in the trash. Make money from it.
That's so good.
You know, like, absolutely make money from it. That's what some of the major companies do. Think about what Kraft Foods, they started off with one and now multitude of a selection from something else. So we as small businesses can do the same to win.
Love it. Dude, these are the kind of nuggets that I'm talking about. Like, it's funny. It comes so naturally from you. Like, oh, this is not. I'm here like, whoa, like, yeah, like I never thought about it like that.
I mean, but think about it, man. Failing to some people is embarrassing, right? A lot of people don't like to fail.
I'm used to it by now.
Right, but that's the thing, though. When we was talking about you learned from it, when you told me your story, you started this business, you started that business. And I mean, I love to hear that because you know how many people don't start it all because they're scared of failing.
Oh, man,
that's not saying, but you know what? I guarantee every time that you failed, you took that lesson and you applied it towards your next business, which puts you just that much closer to being successful.
Yeah, it's funny you said that your heat press was in the box for like a year.
Yeah,
I get that call or that email or that comment so much. It's like, because we do like a quick plug. We do weekly classes here. So I give like 4 classes a week. We do now.
I should have been in one.
Yeah. At the time of this video or this podcast, we're doing one for sublimation, white toner, and heat presses, but one of them we do twice. Anyways.
That's nice.
So we have people coming in the classes and they're like, oh, good, my cutters or my heat press or whatever has been sitting in the box for a year, for 2 years. It's been in the garage, and I'm like, dude, I would have messed up. I would have like started like 4 failed businesses in a year, like.
Right.
And so that's why, like, when you say that, like, it was in there, like, oh man, like, you're right. Like, I guess it is a good thing to just get out there and try it.
Man, that's what most successful people, if you look at it, they have failed so many times.
Yeah.
So look, I mean, Mark Zuckerberg failed, right? Jeff Bezos failed. You can research them and look at the history of businesses they've attempted, and they failed so many times before they get it right.
Yeah.
You know, so if I can encourage anybody to do anything, DFO, don't freak out. That's what I tell everybody. Don't freak out. Just do it. If you fall, so what? Get back up. Just don't stay down. Yeah.
All right. So you're a serial entrepreneur. You're developing businesses. You land on the good one, right? So you've been doing. You mentioned you've been doing tax preparation for about 15 years. Mm-hmm. I don't feel like doing the math, but it's obviously before YouTube, right? So what kind of led you to sharing like the information on YouTube and just making it public and like making it free?
You know what? Great question. And my journey to YouTube began because before I became self-employed, I want to make this clear. Like I haven't always been an entrepreneur in the sense of being self-employed. Like I have had corporate jobs, right? And so before being on my own, I did work for one of the big box tax companies, right? Like that's why I took my training at. That's why I started that first season at. And my journey there, it was the greatest time. Had met some of the greatest people, but I was in a box. Like I like to do things, right? And the journey to YouTube came to that because, like I said, I would always have my business clients, and we would see them once a year. That's normally when you see your clients, is once a year. But they wouldn't remember the information I was telling them from the visit. And so I was like, there has to be a way for me to provide this information to them that they can access on a year-round basis. So I was asking, my management team, the corporate team, like, how can we put together something to provide these business owners, like throughout the year, here's what you need to do, here's what you need to know. So that way, when you come sit down with your tax preparer, you're prepared. Yeah. There's no shocks. Because the one thing, when you sit down with your tax preparer, that year's already done. We can't go back and really correct anything. You've already spent that money. You've already did that thing, right? So I said, I'm going to make a video. And I said, now, where am I going to put this? I didn't want to pay for none of the hosting services. I was I don't want to do that because I'm not trying to, my goal wasn't to make money. It was like, I just want to educate. So I said, YouTube is free. And I posted it on YouTube, not really paying attention to the fact that YouTube was the type of platform that it is, where the algorithm would kick in and it would share the video to other people. Because I put it there and I just told my customers, when you need to know information, go check out this video. And when I put that video on YouTube, it really, it kind of took off. Like people, and that's what started it. People was like, well, what about this? Because nobody's ever told me about that. Yeah. But I'm like, I guess I could do a video about that. Let me explain this. And based on the community is how the YouTube grew. Because every video I did was because somebody in the community was curious about it.
So just super organic development there.
Absolutely. Yeah. Like no advertisement, none of the. Yeah, and that's how I really appreciate that, man. So I, shout out to the self-employed community, man, because they did that. Yeah.
Yeah, and that was about 2016, I want to say, right?
2016. It was funny because after that first video, again, I had no intention. Really, the name, the Self-Employed Tax Guy, came from my community. I wanted to start a business, and I called it Action from Square One, AFSO, and I got church and everything I had made because I wanted people to take action from where they were, which was square one. We started at square one, take action from square one. That was my consulting phase, or I wanted to be like the life coaching because I went and got certified to be a life coach and all this stuff. So I wanted that to be my business, which is another lesson. Sometimes what you want and what your audience want is two separate things, right? Yep. So I tried to really force the action from square one onto my YouTube audience. And they like, nah, we don't want to hear nothing about that.
Just collectively, no.
Yeah, we don't care about all that. Just let's stick to the tax and the business side. And so one day, one of the community members, they was like, man, we just gonna call you the self-employed tax guy. Cause that's what you're talking about. You're giving us, you're helping the self-employed. And I was like, all right, I'll take it. Yeah, all right. The self-employed tax guy it is. And I completely rebranded.
Wow.
Let go of action from square one, focused on the self-employed tax guy, and here I am.
Wow. Yeah. And so when did that change come about, being the self-employed tax guy?
Oh, man. So I posted the first video in 2016. I'm going to say probably maybe 2018. So okay, you see, I fought that for 2 years. Yeah, I fought that like, this ain't what I want.
Yeah.
But the audience loving it. Actually, I didn't realize, that it's my passion. I find this the easiest thing to talk about.
Yeah.
And I'm still doing what I wanted to do, just in a different purpose.
Yeah. Man, and it definitely flows real natural from you. And so it makes sense that, that's what everybody would lock on to.
Right.
Dude, the quality of the content is really high, especially in the sea of like the current, because there's lots of tax and personal finance, small business finance influencers out there. And I'm like, yo, where did you get your certification? On a cereal box? Dude, are you from YouTube University? Where in the heck are you getting these ideas from? Because I don't claim to be super, I know all things about taxes.
Right.
But I know at least enough to know when someone's just shooting just garbage info, right? So to find a reliable source like yourself has been very valuable to me, just as having my own side hustle, right? And I'm going to ask you some tax questions later.
Let's go. Yeah.
But I noticed that in a good chunk of your videos, you're battling misinformation.
Yes.
Which is very much needed, especially in today's social media landscape. Is that one of the main things that drives you, or what would you say is the main thing that drives you to just keep putting out content?
I would say it is definitely one of the main thing that drives me. What drives me the most is to see minority entrepreneurs succeed, right? Because we are the most underserved, and it's because of that misinformation. We'll take this one little 40-second clip that seems exciting because of the lifestyle marketing, and people are showing, hey, I got this Lamborghini, you can get it too. And it's if it was just that easy, Right. So that is definitely what drives me. There's a lot of misinformation, a lot of misconceptions, especially when it comes to what people are saying about taxes, right? You can do this and save money. And one of my favorite sayings is run the numbers.
Yeah.
One of the biggest things out there, and this probably not no more because the tax laws have changed, but just last year, right? Everybody wanted to buy the G-Wagon.
Dude, okay. So one of my wife's old friends, she was, all over her Instagram. She was she was just showing off her G-Wagon that she got. Oh, it's tax write-off, blah, blah, blah. And I'm like, I don't know, bro.
And see, that's the thing. It is. It absolutely is. And that's what I combat for me personally. What people are saying is true, but there is a big but to that, right? And that's where I come in yes, you can write off a G-Wagon if it's used for business purposes, but let's run the numbers. In order to write off a G-Wagon, you have to make a certain amount. So I like to run a scenario. Let's just say you make $250,000 a year, because that's about what a G-Wagon costs. So at $250,000 a year, tax on that would probably be $50,000. Right? So let's do the math. Let's say the tax is $50,000 on that. $50,000 is what you owe in taxes. You go buy a G-Wagon to zero that out. You can't do it. That is absolutely true. But let's, again, run the numbers. The G-Wagon itself is going to cost you about $250,000. So when you look at reality, you spent $250,000 to get rid of 50.
They don't tell you that.
But they don't tell you that. And that's where I think, but that's what keeps us as minorities. Because instead of just paying the 50 and keeping the 200, you've now put yourself in deficit.
Yeah.
You've now created debt for yourself because it looked good. But that's how people make their money. They get you excited, right? We want the G-Wagon. We want to be successful. So let me go out and do these things, not knowing on the back end, you just really, that's like saying, man, I owe you $1, but I'm going to give you $100 so I can get rid of that debt. We laugh at that when we say it that way, but that's a lot of times what happens in the tax world.
So going back to your G, so I'm curious now. So the G-Wagon person, right? Mm-hmm. They made $250, got rid of their $50,000 debt, but then they spent
$250,
spent $250
for the G-Wagon. When you look at even if you buy the G-Wagon, all right, $250,000. Think about it, because let's say you made $250, right, and you got cash $250. You went and bought a G-Wagon for $250. Only thing you did was get rid of $50,000 in debt, but you spent $250,000 to do that.
So you have zero.
Yeah, so you zeroed out. Now you own those
across the board. You're zeroed out because you made no money that year.
Exactly.
Wow.
Yeah. So I mean, like I said, it is true.
You broke with the G-Wagon.
But there you go. You broke with a G-Wagon.
Wow.
And the thing about that is, it's like, well, now you have that. What you gonna do next year? Because if your goal is to continue to make money, hopefully you make $250,000 next year. What you gonna do? Go buy a new G-Wagon?
Sell this one. No, I'm just kidding. I have no idea.
But hey, think about that. Good point, because people don't talk about that either. If you depreciated it to get that $250,000 write-off, and then you sell it, now you got depreciation recapture, which is going to be like a capital gain. So, but they don't talk about that.
I need to call you before I spend any major money.
You know
can
what?
Talk me out of it,
man,
bro.
Highlight that clip, because that is the key. Before you spend any dime, talk to a professional.
Yeah.
Because sometimes you may not people like, oh, especially December, how much money do I need to spend so I don't have to owe? I'm like, well, let's do the math. If you plan on spending $2,000, what if you only owe $200? I'd rather you just pay the $200 and keep $18 in your pocket, reinvest that, pay off your debt, grow up.
Yeah, everybody's into like not cheating, well, like cheating the tax man or like getting around tax. Like, oh, it's like everybody's looking for like the cheat code and like the secret sauce, the back door, and it's just like
it just doesn't exist.
Yeah.
If I had to be honest with people, it really doesn't exist. Like, people make it seem like it's a cheat code because they wasn't aware that they could do such a thing. Mm-hmm. Right? Like, depreciation was a real big term a couple of years ago because nobody was like, oh, I didn't know I could depreciate that. It's not a cheat code. It's been in the code for years.
Yeah.
It's unfortunately that your preparer maybe didn't have that conversation with you, right? Or maybe you were just like, oh, I'm going to just do it myself on TurboTax because I didn't want to pay nobody. But it's not a cheat code because it exists.
Yeah.
That's why I say, before you spend that dime, have that conversation, because there are things that do exist that we can sit up here and we can strategize over. That may be able to save you some dollars before you go out there spending all this unnecessary money.
That's really good. Spending unnecessary money. Even people who call in or they talk to me about like buying a heat press. Like, I'm not trying to get you to spend unnecessary money.
Absolutely.
Like, you do what works with your business.
That part.
Yeah.
That part. But that's the key. You have to know what works with your business.
Yeah.
And I think a lot of people don't know. They kind of wing it. They just go out there and they have this idea like, hey, I'm going to go do this, and I need to spend all this amount of money. I'm like, let's slow down first. Let's do an assessment, see where you are with your needs. Mm-hmm. Have you identified the service and product that the customer is going to need, your price points? Because this is so many things that go into a business. Man. But again, I learned all this because I started so many failed businesses, learning as I go.
Well, man, that's so good because in our industry, and I'm speaking for myself as somebody who has already launched like 3 t-shirt brands and failed them all. It's so easy to get excited off of like, oh, I have one cool design and I'm going to quit my job now. And it's like, whoa, bro, you got to ask the right questions.
Tell them to be Tarzan. I call that Tarzan.
What? Why Tarzan?
Because Tarzan is like, when we look at Tarzan, he swings from branch to branch, but he never lets go of the branch until he has a good grip on the other one. So I say when you're doing that, don't ever let go of this.
That's good.
Until you have a firm grasp on this. Because if you do, you will hit the flow.
These are the gold nuggets, you guys.
You will hit the flow. Yeah. Some people say that, like, don't do that. Just be like Tarzan.
Yeah.
Yeah.
So you're on a crusade, man. You're on a crusade against unnecessary LLC formation. Now, for dummies like me, okay. First of all, what is an LLC? And second of all, what?
Woo, okay, let's go.
For dummies like me, what is an LLC? First of all, and then second of all, why do so many people think they need one?
Oh man, an LLC, the legal term is a limited liability company, and I'm gonna say there's a very key distinction because it's not a limited liability corporation. It's a limited liability company, and there's a very reason for that distinction. But the reason why a lot of people think that they need LLCs is because of social media, because of propaganda, because of fear, right? Mm-hmm. The key word is limited liability. So people think, oh, if I have an LLC, I'm 100% protected. Mm-hmm. And I say, it's in the name. Limited, it's not 100%. There is limited, so it does provide some level of protection, but that's only if it's set up properly, and that's what I think I'm gonna say 99.9% of the people fail to set up their LLC properly, and it's not just the paperwork that makes your LLC properly functioned, right? So my crusade is to tell people stop doing that.
Yeah.
Because it is, in the beginning, it causes more harm than it does produce more income.
Okay.
So there's no need for an LLC in the beginning. It's just not. Right? If you want to start a business, I say form a DBA, which stands for doing business as. And what a DBA does is it allows you to still go out there in the world, in the commerce world, and transact business in the name of a business outside of yourself. Like I could be Tyrone Gregory doing business as the self-employed tax guy. And I can open up a bank account, I can get a business card, I can get a website, I can do all of that without having to pay for an LLC and then be that $800 a year here in California.
Yeah, and so these LLC like champions, like that's one of the other things that they tell you is like, oh, so you can go, because they'll even tell you in the steps like, yeah, go get an LLC, go to the bank, all that stuff, and it's like an LLC is always their first step.
It is.
And so then when I came across your content of like, don't do it, I'm like, but why? And of course as you go deeper, you realize the answers.
Yeah.
So like, okay, so you're saying start business as a DBA. I've been seeing a lot of content lately about S Corp. Like, what's an S Corp and why is that also not great for starting out?
An S Corp, let me say this, an S Corp is not an entity. It is a tax election. That makes sense. Like you cannot form an S Corp at the state level. There's no application that you can fill out, submit to a Secretary of State and say, I'm going to be an S Corp. You're either going to be an LLC, C corporation, a regular corporation, or a partnership, and then you submit an application to the IRS to say, I want to be taxed as an S Corp. And the reason that is because LLCs, from the IRS perspective, they're considered disregarded entities. LLCs are treated the same as a sole proprietor in the eyes of the IRS. Absolutely no difference at all.
So there's no tax advantage.
Not a one. As a LLC, not a one. That's what I say, you can get your LLC and you can get all these taxes. And I'm like, don't work like that, because people make it seem like, if you get your LLC, if you spend $100 in gas as a sole proprietor, as an LLC, you get to write off $200 in gas. And I'm like, no, it's still going to be $100 deduction. Like it doesn't work like that. But an S Corp comes into play because it can help you reduce self-employment tax. I will say, and I'm very transparent when I say that all of these things have their place in the business world. It's just that you don't want to start off with it. It's like giving your teenager who's just now learning how to drive the keys to the Lamborghini. It doesn't make sense for that. So an S Corp is what's called a pass-through entity. And I know it's about to get technical with the terms, but it's you guys could Google. We're going to put subtitles of like these terms that you guys could Google it. Pause. Exactly.
It's on YouTube. It's on Spotify. Pause. Google.
Yeah, there you go.
Yeah.
So pass through means that the earnings of the business pass through to its owner or owners, depending on how many of it is. But with an S corp, well, let me back up. As a single member LLC, like if it's just you haven't had the S corporation, you're an LLC, you're subject to self-employment tax on your net earnings. Not the gross, but after you subtract out your expenses, what's left over, that's what the tax is applied to. But when you get to a certain income level, of course, the taxes go up. So you can reduce that by having an S corp. And what an S corp does is allows you to pay yourself a wage, and that's the amount that you elect to have yourself receive as a wage, that's the amount that'll be subject to the self-employment tax. The other amount, which is considered passive income because the IRS treats you as investing into a corporation. So that passive amount, it still gets reported on your tax return, but it's not subject to the self-employment tax. So you get to save money in that instance. But here's why I'm so against it. Because people will form their LLC that they don't need and immediately opt to have it taxed as an S corp, which they don't need. So what happens is when you have an S corp, you have to put yourself on payroll. So now you just create an additional expense. Now when you have an S corps file separate tax returns. So now you just create an additional expense because you're filing a separate tax return, and they aren't cheap for S corporation tax returns. The S corporation kicks out a K-1 that goes to your personal tax return. So you just added additional complexity to your personal tax return that you have to pay for. The S corp also, when you're filing the tax return, you can look at it. You can Google irs.gov, type in form 1120S, and look at the form and everything that comes with it. So you have to have bookkeeping because there's a balance sheet that you have to keep on there. So now you're adding all of these additional expenses to your overhead that you're not even benefiting from.
And you're only selling 40 shirts a year.
Exactly. And so people were like, well, it saved me $1,500. Yeah, but it cost you $3,000. So it's like, look at the cost. So like when I'm trying to get, especially minority entrepreneurs to do is, let's really structure this out, right? To me, there's three stages in business. There's the infancy stage, the adolescent stage, and then there's the grown folk stage. When you're in infancy, you don't want to spend no money.
Yeah.
You're just developing your idea. You're just understanding who your target customer is. Just do the research. Yeah, you'll spend a little money going to the networking events. You'll spend a little money maybe doing some research here and there, but not on no entities and stuff that's not going to benefit you. Right? In the adolescent stage, now that you understood your customers, you made a few sales, let's do the DBA. Right? Because now we can start building the brand. We can get customers used to the brand. We're still saving money. We're still operating as a business. And then once we reach my cap, my threshold is 100,000 net profits.
Wow, that's a lot of money.
Right. I mean, but it makes sense when you run the numbers. 100,000 net profits, you will actually save money forming the LLC and having it be taxed as an S corp. That's where the savings come in. So if you're not reaching 100, and again, that's not gross. I'm talking net.
Net, yeah.
That's after everything has been subtracted. If you're not reaching that number, you should not be an S corp. You should not be an LLC.
Wow. You had this one thing that you posted, which I thought was just mind blowing. You're like, what's a better goal?
Yeah.
Forming an LLC or making $100,000? And that blew my mind because so many because it does feel cool. When I first started like my very first business and I got my California resale certificate, right? And it had my business name on there. I was like, oh, look who's fancy now.
Yeah.
Right.
Yeah.
I was pumped, dude.
Yeah.
And then I thought, oh, cool. Next I'm gonna do this. And I wanted anything with my company name on it.
Right.
Because it felt cool.
And you know what, man?
Right?
Same here, man. That's why I say when I had so many corporations, like I've had, like people say I'm against LLCs. Like, I've had LLCs. I've had corporations. Like I've had that. But because of that sentiment, I thought that by the mere fact of me getting that paper from the California Secretary saying congratulations, I was, man, I'm a CEO. I'm a boss, look at me. And that's all I had was the right to say that. I had no income, I had no business, I had no product, had no customer, but I had a paper saying so, right? So when I say, would you rather have, y'all don't mind if we get a little serious right now.
I'm
gonna say,
man.
Okay, so that reference is kind of like dating, right? When you're dating, you can date to marry, or you can date to have a one-night encounter.
Tell the young folks, bro. Tell them.
I'll say this. But think about it, right? Because when you date to marry, you move completely different. Like you are thinking different. You're thinking ahead. You're planning. You have a lot more patience. Like the goal is different.
Yes.
Right?
Yes.
Except for when you date to have that one-night encounter, it's a meh, okay, I'm going to go out here, get it. And if that one-night encounter happens, cool, I did it. Now the thrill is gone. I ain't put that much energy towards it, right? That's the same with the LLC. If you get the LLC, then okay, I've achieved that, right? Like we were saying, oh, look at me, I'm CEO, I'm boss. But after a while, that fades away because nothing else is happening.
Yeah.
Versus if your goal is the $100,000 to me, which is like the marriage, because that's the goal.
Yeah.
You do things differently. You move differently, you think differently. And even if that one night encounter happens because it wasn't the goal, you still have enough energy and effort to move forward with it. So people who get the LLC, and I've seen it so many times at my desk, even just recently saw somebody, they're like, yeah, I got an LLC. And I'm like, okay, what are we doing? Let's run the numbers. And I'm like, how is this benefiting you? And they're like, well, I guess it's really not. I said, well, yeah, now you owe the state of California this amount.
Yeah.
Tax bill just went up this amount. They was kind of upset. And I'm like, well, why did you get the LLC? And they like, just because what everybody said I needed.
Puts it on the business card. It makes it look
And if you say it looks good, and they like, oh yeah, LLC helps with your marketing. And I'm like, what helps with your marketing is your brand. Like, do you provide a good quality service? Do you provide a good quality product? Because like a lot of companies don't advertise that they're LLCs that we spend money with. Yeah. Like think about it. Like when I bought my heat press machine, I didn't check to see if y'all was an LLC. Right? I just wanted the machine because it's gonna help me do what I do. So we have a lot of misconception about that. But I say the $100,000. In that analogy that I just gave, that's the marriage goal. Because when you have that, everything is different. I don't want, if my LLC is the goal when I get it, now what?
Yeah, exactly.
Versus if $100,000 is my goal, I have a whole bunch of other things I got to think about how I'm gonna achieve that.
Yeah.
So that's what I say. Which would you rather have?
Yeah.
And hopefully.
And there's definitely, by the time you hit that 100,000, you've learned a gazillion more lessons along the way than just.
Same with marriage.
Yeah.
Yep.
Yes, sir. Yes, sir.
Yeah.
All right. So I like how you have like an attainable goal, threshold, 100,000.
Yes.
So 100,000 net, right? Is that the only one? Are there any other like key signs that maybe there's people who out there who are at that? They're like, hey, I'm getting close to that 100,000 net mark. Or they're forecasting, hey, this year I'm forecasted to be doing that. I
love that word, yeah.
Like what kind of person should be looking into investigating an LLC, like for real?
You said the perfect word, forecasting.
Okay.
And the reason I say, or the reason I like the word forecasting is because if you get to an S Corp status, again, a lot of people talk about it on the surface, but they don't really tell you what really happens behind the scene. If you get an S Corp prematurely, and you figure out like, okay, this ain't working for me, I'm just spending too much money, and you have to cancel that election, it's possible the IRS will not allow you to go S Corp again for another 5 years.
Oh,
so exactly.
They don't tell you that on Instagram, guys.
They're not going to tell you that. That's why I say don't do it until you know. Yes. At least if you can project for 5 years, I'm going to be here. Now let's talk these numbers, because there's a lot of things we can do in that. Because I don't want you to get started and then be like, oh, it ain't working. It's costing me too much money. And now you opt out and the IRS says, well, you can't do it again for another 5 years. Right.
Yeah.
And so then when within that 5 years you start making the money and now you have to pay this high tax because you prematurely did something in the beginning. Right. So that's why I say the planning is important. Choose the 100,000 not the LLC. Because when you choose the 100,000, you move differently. You're planning. You can sit up here and say, is this going to be attainable? Is this going to be maintainable for the next 5 years? Right. So attain and maintain are the two things we want. But when we have that in mind, we work towards that. We can see. We look at the numbers. We look at the big pictures. Like, yeah, okay, I made it this year. Why? How? Can I do that next year? What worked in my business? What didn't? Being able to make those moves, but understanding that, like I say, when you have a goal of 100,000, it's a different mentality.
Yeah.
Same as somebody who's dating to marry versus somebody who's dating to have a one night encounter.
Dude, you're helping people's businesses and their relationships right now, bro.
Absolutely. Yeah.
All right. So still talking about small businesses, people's businesses. What are some, like, moving on to like taxes, because that's your thing.
Okay. Yeah,
as the name implies, self-employed tax guy.
Yes, sir.
What are some common tax mistakes that you see small businesses making? Maybe it comes to your desk and you're like, oh, why'd you do that? Besides the LLC now.
LLC would be the first one. Man, the biggest thing is not tracking.
Ooh.
Not tracking.
Okay.
Oh my goodness. If I had to really sit up here and talk to the audience and say, please track everything. Like everything.
Like keep all my receipts in a shoebox type of thing? Or
like, if that would work for you, I'm gonna say do it, even though I don't like it, but it's better than not doing nothing.
Okay.
But keeping track is probably one of the biggest reasons small business pay more in taxes and lose money is because they don't track.
So people are losing money because they're not tracking.
Right. Like I have a I wrote an ebook. I guess that's a shameless plug, right? Called
this is the place to plug it.
but it's called Protect Your Profits. And the idea is because I see people all day at the tax desk guessing. Right. When they come at the tax desk, they're like, well, how much did you spend? Maybe around. And I'm like, how do you not know?
Yeah,
right.
Yeah.
Or they'll be like, it's the same as last year. And I'm like, no, it don't work like that. And what happens is because we're not tracking, we're losing out. Because I'll be honest, like we are, as humans, we forget.
Yeah.
You know, we forget. Like
I don't even know what I ate last week. Like,
man, sometime I'll find a receipt in my car. Well, this is before. I'm better now, y'all. Because I will find a receipt and I'll be like, man, what was this? I don't even remember. So what we do, because we don't remember, we toss it.
Yeah.
But now that was an expense you just couldn't write off. Right? A lot of times we forget. They're like, oh yeah, I forgot to spend money on that. Right? So tracking is probably, especially when it comes to small business, and it's not just for purposes of taxes, it's for purposes of growth and scaling. Because how can you know what worked in your business and what didn't work in your business if you're not tracking?
Yes.
For example, shirts, right? You may, like I have a design. Let's say this design I'm selling and I have another design that's not. If I'm still spending money on a design that's not selling.
Yes. Yeah.
Yeah, I get to write that off of my taxes, but now I'm like, I'm wasting money because we're not tracking, miles. A lot of people do not track. I don't know why. Why y'all don't track y'all miles. I don't get why. Like if you drive, and a lot of entrepreneurs do, they drive to pick up supplies. They drive to, like, if you have a shirt business, right? Think about that. You're going to pick up your vinyl, going to pick up your transfers. You're going to the post office to drop off, to mail to the customers. You're running around getting the shirt. You're doing a lot of driving, but nobody's tracking that. And that is one of the biggest free expenses you can do. Because the IRS gives you a certain amount % per mile that you drive as a deduction.
And you're driving anyways.
So why not track it? But people don't track.
So I get these ads on Instagram a lot, and I don't know how they found me. They found me. They got me. I get a lot of ads for tracking apps. Do you recommend that?
I do.
Oh,
If you're not disciplined to really write down everything, because the IRS, you can go on irs.gov, type in mileage, they'll give you a little sheet that you can print out and you can just write down the three things they want to know: the date, They want to know the starting location. Well, let me not say starting location, but the beginning mileage. So you would look at your odometer and say, okay, this is my odometer reading at the start of this trip. When you arrive, you would say, this is my odometer reading when I arrived. And then they want to know the purpose, right? So date, odometer readings, purpose. That's the only thing you need to know. Because what the difference between the beginning and the start, that's the total miles, right? So now we have a number. And then we have substantiation. So if the IRS ever wanted to see, like, okay, here's my log, right? But apps help with that.
Yeah.
Like they automatically connect to your GPS. Like Mile IQ is one, a good one. I do believe it's like $60 for the year. That's deductible because it's for business purposes. It is deductible. But you just simply, when you go on there, you can swipe left for business, right for personal. At the end of the year, you have a report. You know, so I definitely recommend if you're not disciplined to write it down, get an app. But that's why technology today makes things so much simpler. We just have to use it.
Yeah. Now, speaking of writing things off, what are some like really common write-offs? And if you don't mind, like for like t-shirt businesses or like, you know, sublimation, like coffee mugs, like, cause I know your knowledge, you have a pretty good knowledge of our industry and a lot of like small businesses. So like specific to like garment decoration, like what do you think are like some common write-offs or tax deductions that people should be considering?
Should be considering one, obviously your machinery. Right, but I want people to understand, and I'm glad you asked that. In the garment decorating industry, there's three things. Well, there's three categories, right? You want to understand what's equipment, what's supplies, and what is inventory, because each one is treated differently for tax purposes. Equipment, we depreciate, right? Supplies, we write off. Inventory, we put as cost of goods sold. Which I think when I deal with people in the garment decorating, the cost of goods sold, they're like, what's that? And I'm like, oh.
I feel like I'm in class right now. I want to raise my hand. So when you say we depreciate equipment, you don't take the full value up front, or you depreciate over time?
Yeah, when we talked about forecasting, that's why I say have a conversation with a professional. Because think about it. When you're just starting, you may not want to take the full value in the first year. Because with depreciation, you can, with Section 179 and bonus depreciation, you could probably write a machine off in the first year. But what if we don't really have a lot of money in the first year, right? So let's just take some of the depreciation now and spread the rest of this expense over the next year. For example, let's just say we get a heat press machine. You know, heat press machine, we consider that equipment, 7-year depreciation. You can take that cost and spread it over 7 years. So as you go into your future business and you're making money, you don't have to worry about, I need something to write off. Well, remember that machine you bought 7 years ago? It's still being written off now. Yeah. As opposed to, we wrote it off on the first year, now we ain't got nothing. But that's where projecting comes in at, right? Forecasting. Well, what do we think we're going to do? Man. So now, but to me, that's the strategy of a successful business owner. Not being excited to do that. I'm gonna write all this off because they said I can.
Yeah. Geez.
Yeah, you can. But what about next year? You don't plan on being broke? I hope not.
Yeah.
Right? So if you plan on making money, then let's be smart about it. Let's be strategic.
Yeah. You have a really interesting guarantee on your site. Lowest refund guarantee.
Yeah, lowest refund guarantee.
Dude, okay, when I first saw that, I thought, it's just a gimmick. This guy, I caught him. No. But I got you, bro. And then I read it and I was like, oh, this dude. Yeah. He gets it. Yeah. Can you explain what your lowest?
The lowest refund guarantee is just that. Like, people look at refunds as a big thing, and getting a low refund is a bad thing. But from a business owner's perspective, right? If you getting a refund as a business owner, that simply means that you overpaid, that you was not paying attention to your finances. You didn't keep your books because you gave them an excess amount of money, and at the end of the year, they simply gave it back. That's what a refund represents as a business owner. Yeah. And we think about that. If you have a vendor that sent you a bill for $1,000 and you sent them $2,000, and the vendor just held on to it to the end of the year, oh yeah, you gave me extra money. What does that say about you in your financial situation? Yeah, right? Like, you like, man, I wasn't paying attention. That's the $1,000 I could have used for more inventory. $1,000 I could have used for more marketing. So my lowest refund guarantee is I want to sit down with you and we're going to look at the numbers because I want to make sure that you are I'm gonna say in swing of $100. Like, you don't want to owe them no more than 100. You don't want them owing you no more than 100, because that means you kept your money to do for you and your business throughout the year. It didn't go to the government, because what they gonna do with it? They're gonna invest it. They're gonna spend it. They're gonna send it to war. They're gonna do all kind of things with your money. Which you can do things to increase your money with it. So my goal is to get you to the lowest refund possible, because if you have a refund, think about it. If you have a refund of 0, you did everything right.
Nice. Yeah.
You paid them just what you were supposed to pay them. Why? Because you was tracking throughout the year. We had everything. We understood our income. We understood our expenses. We paid our taxes quarterly, right? So at the end of the year, be like, cool, check the box, everything matches, done.
Yeah.
We good. That means you did. When you get to a 0 refund, you are financially astute.
Nice. Dude, I love it, man. That's so good. We used to joke around and be like, because, tax season comes around. This is when we're young, like 18, 19, like we all just barely had jobs and stuff, right? And then like we would joke around like, hey, like especially with like to our friends, like the girls, like, hey, don't date any guys who like get a fat refund. It means he's broke.
But it's not a joke. It is not a joke. I mean, I hate to say it, but getting a refund means that you're in a certain economic class.
Yeah, it means you didn't make a lot of money.
You really, because if you go over a certain amount, your refund disappears. So that technically means that you're in a certain economic class in order to get a refund. But it's a mentality, because people will want to stay in that economic class for purpose of a refund. Right. And I'm so against that.
For a one time a year.
Right.
Well, yeah.
And I think about, like, if the goal is money, some people get excited over a $10,000 refund. I'm like, yeah, that's cool. But to get a $10,000 refund, you have to make, let's just say, $24,000. So if you add your $24,000 plus your $10,000 refund, that's $35,000 for the year. But I've had people quit $40,000 paying jobs because they wanted to get that huge refund. And that's what, man, it hurt. That hurt.
Yeah.
That hurt. I recently, and I posted about this on my Instagram, I had a client who made $6,000 more. His refund went down $1,000, but was upset because his refund went down. I'm like, well, but you made more. I said, even if you take the $1,000 refund that you got less and you put it back with the $6,000 you made, you still came out on top $5,000.
Yeah.
But he was like, oh man, I ain't gonna work that much no more. I knew I shouldn't have worked that much overtime. And I'm like, but you made more. Yeah. But it's unfortunately, when we see them big numbers, we get excited. We think it's something. And unfortunately, it is a detriment to us, unfortunately. So maybe, if you're working with me, I'm happy to accept you, but I'm guaranteeing the lowest refund possible, because my goal is to make you so much money that you ain't even worried about taxes. That's the goal.
There we go.
That's the goal.
All right. So this one's from me. All right. I was gonna say like, oh, somebody here asked, but nah, this one's from me. So, and then people, actually viewers of the podcast, they know like 2022 really sucked for me for my side business.
Okay.
For like, as far as life is concerned, it was great. I had a new baby, all that stuff, right?
Congratulations. Yeah.
But like, basically, once my wife got pregnant, like I just like. I put the brakes on my side business.
Okay.
So I can focus here. Obviously, this is my day job, right? This is where I work. And then, obviously focus on my wife, right? So 2022 was, for a side hustle standpoint, was terrible for me.
Okay.
I ended up, and you were just talking about like, oh, don't just remember like tracking. I didn't do a good job tracking it. But so I ended up grossing somewhere close to 1,000 and netting somewhere closer to like 500, roughly, right? Okay. But I do remember that my net was less than $600.
Okay.
So you tell me if I'm going to jail or not. So when I filed my taxes for 2022, I didn't claim the side income because I know, and here's the thing, I should have even just Googled it. Like, I know that you have to report income over $600 if I'm right. No? All income? I had heard somewhere, I was misinformed that income over $600 gets reported. Otherwise, it's like whatever, right? Nobody cares. So I didn't report the income, which was closer to, I would say it was like the closer to $900 range.
Okay.
Netted under 6, gross closer to 9. am I going to jail?
Well, first, I'm saying you ain't going to jail.
Okay.
I will say you're not going to jail.
Babe, we're good. Not going to jail.
I will say you're not going to jail. However, depending on how it was reported, the IRS may send you a letter.
Oh, okay.
Yeah, because here is, which is a great question, by the way, and I think this pertains to a lot of business owners about that $600. Like that number, 600, is definitely burned into the minds of a lot of entrepreneurs. But the $600 threshold is for when you're paying somebody. Not necessarily what you're earning yourself.
Okay.
That's when you pay somebody $600 or more, then you have to report that income on a 1099 NEC, right? Versus if you pay somebody $100, you don't have to report that. Okay.
Is it 600 total for the year or 600 per transaction?
600 total for the year.
Oh, so if I have a vendor that I use and I pay them $100 every 2 months, 600 in the year, I got to 1099 them?
Correct. Well, now, so let me state this. So when you say vendor, are they independent contractor or are they corporation? Because, like, for example, if you go to Home Depot,
okay.
you're not going to issue Home Depot a 1099.
Got it. No,
right?
I pay somebody to do social media stuff.
Yeah. So if they're working as an independent contractor, then yes, you would definitely issue them a 1099. Also, the $600 threshold comes into play. Well, no, that's $400. So if you're self-employed and you net $400, well, then you're not subject to self-employment tax. You still have to report the income. You're just not subject to self-employment tax because it was a low amount. So in summary, all income is reportable. Yeah, but you ain't going to jail. Everybody going to jail if you didn't. Okay. You ain't going to jail if you didn't, unless you really didn't report a couple of million. Yeah, then. But for the most
not
part,
MC Hammer. Okay.
Yeah, but yeah. So definitely report all the income. Like I said, depending on how it was reported. Because think the rule of thumb is if somebody wrote it off, somebody has to claim it as income. So if those vendors or whoever you was transacting with wrote off that they paid you a certain amount of dollars, then the IRS was like, okay, well, did he claim it? Yeah, you know what I'm saying? And if
okay.
And when they do the reconciliation, if the numbers don't match, then they'll send you a letter saying, hey, and again, don't freak out.
Yeah.
When you get a letter from the IRS, it's not meaning that they about to come arrest you. They're about to raid your house. It's very simply to say, hey, you reported this. We received this. There's a mismatch. Let us know what's going on. That's 90% of the letters you get from the IRS. But people look like, oh, I got a letter. I'm just throwing it in the trash and hope it go away. Yeah, no, just open it up. Trust me, a lot of times they just want information. So
got it.
Yeah.
Okay. Well, looks like gotta go do some. What'd you call it? An amendment.
An amendment, right? You can always change it. And I'm saying this too, though, because depending on the situation, that $500 could have put you in a range to where it benefited you even more. Because a lot of the credits that we deal with is based off income, right? So it's like a bell curve. If you start here at the bottom, if your income is like at the bottom range, then the credit will be small. But if you add income to it and it puts you at that perfect range, then the credit goes high.
Okay.
So it's possible that extra income could have actually increased your refund. Like, it may be small. Like recently, and I got the stories today because they literally just be happening. How the customer, she's like, oh, I forgot to give you this extra W-2. I'm going to give it to you because I only worked like a day at the job. And I'm like, give it to me. One, you don't want no letters from the IRS.
Yeah.
Two, let's see what it may do to your refund, right? And so put it in there. Guess what? Refund went up $89.
There we go.
Yeah. And I'm like, see, it was only to your benefit. You know what I'm saying? So, I say always report everything. Report everything.
Report everything.
Absolutely.
Man, dude, Tyrone, seriously, this has been, I feel so valuable for me as a small business owner, as a fellow serial entrepreneur.
Absolutely.
And so I really know that our viewers are just really, I hope everybody takes this in. I hope you guys are pausing and Googling whatever the terms you're seeing or hearing in this podcast. But dude, before we let you go, where can people find you online? Where can they get your content? And you're a taxpayer. Are you California only? Or?
No. Well, by me being an enrolled agent, I'm actually licensed to practice in all 50 states. Yeah.
Okay.
Yeah. And I have clients in New York, Texas, Florida, Nevada. Yeah, I have all over. Technology today, man.
Oh, that's awesome. Okay. Yeah. Well, can you tell everybody where they can find you?
Yeah, really. They can find me at theselfemployedtaxguy.com. That's my website. Obviously, YouTube, the same, the Self-Employed Tax Guy. If you ever want to get all the free information, LLCs, DBAs, S Corps, what not to do, what to do, you can find all that free content there. For tax preparation, like if you're in search of it, it's a long one, but it is the self-employedtaxcompany.com. You can find me there. Yeah. Same handle. Self-employedtaxguy.com is me. The company, the self-employedtaxcompany.com, that's a tax company. And all my social media is at the Self-Employed Tax Guy for Instagram, Facebook. What other ones are out there? Twitter, I think. Yeah.
You do TikTok?
TikTok. Yep.
Okay,
Forgot about that. TikTok. Yep. The Self-Employed Tax Guy. You find me there. Yep. I don't dance a lot though,
Oh, dude.
Yeah.
You guys don't want to see me dance.
Exactly.
Dude, man, it's been an absolute pleasure. I sincerely want to thank you for taking the time, braving this storm, this legendary California storm that everybody's.
Oh yeah, we California. Ain't the rain gonna stop us. We here. Yeah.
Well, again, thank you so much, man. It's been a pleasure. For everybody watching, this has been Customizing Culture, the Heat Press Nation podcast. Again, I'm your host, Jared Barbosa, and today been joined by the self-employed tax guy himself, Tyrone Gregory. Again, thank you, man.